So first, Goldman created the Goldman Sachs Trading Corporation, an investment trust. They launched shares at $100 per piece, bought all those shares with their own money, and then sold 90% of them to the public for $104. But that wasn't enough. The Goldman Sachs Trading Corporation started buying up its own shares back from the public, pushing share prices higher and higher. When the price was high enough, they sold the shares back to the public again, profiting the difference again. And then they sponsored a new trust, the Shenandoah Corporation. It was basically a legal pump and dump, where they would repeatedly pump up the price themselves. They did the same thing there, and eventually sponsored the creation of another trust called the Blue Ridge Corporation. Goldman Sachs had created what was essentially an investment pyramid scheme. So Goldman hid behind Goldman, who hid behind Goldman, and they made a lot of money doing it. The only problem was, if one of the trusts suddenly lost value, you wouldn't be able to pay back the people selling their shares, and the whole pyramid would be massacred, which was pretty much exactly what happened in the stock market crash of 1929. Goldman Sachs lost the equivalent of $475 billion in today's money.